Welcome back to Bitcoin Treasuries. I'm Tim Kotzman. I'm joined today by Phong Lee, the President and Chief Executive Officer of Strategy, the world's largest Bitcoin Treasury company. Phong, great to see you, and thank you for the time and the opportunity.
Well, it's good to have you, Tim, and thank you for everything you've done for Bitcoin, everything you did for Microstrategy, and everything you're doing now for Strategy.
It's been a lot of fun. It's been a great learning experience. By way of background, you've served as President and Chief Executive Officer since August of 2022, and you previously served in various senior executive positions here, including President and Chief Financial Officer, Senior Executive Vice President, Chief Operating Officer, and Chief Financial Officer since joining Strategy in August of 2015. Does that sound right?
Yeah, I've done a little bit of everything.
Okay.
The short of it is, in the last 10 years, I joined Strategy as the CFO in 2015. Took on some additional responsibilities working right alongside Mike. Obviously, in 2020, when we embarked on our Bitcoin journey, I was the CFO at that point in time. Mike was the CEO. And in 2022, we decided that it's best that he spend the vast majority of his time on Bitcoin, which I think we're all glad we did, as the executive director. And I would run the business day to day, both our Bitcoin business and our software business. And that's what I do today. I spend probably half of my time working on our enterprise analytics and AI software business, which is a lot of fun. We have about 4,000 customers all across very large enterprises, name brand companies who enjoy our software. We're pivoting that more and more to AI. And then obviously, I think the folks who are listening to this, and you know very well what we've done on the Bitcoin side. And if you're to ask me if I knew that this is what I was getting into in 2015 and I told you yes, I'd be lying. But I think I have the best job in the world, right? Running a company that intersects in the two most important technologies of the century. I was going to say arguably, but I don't think it's arguably. I think it is they are the two most important technologies of the century, AI and Bitcoin. So how much more fun could you have?
Absolutely. You've also served as a member of the board of directors of Strategy since August of 2022. Can you talk a little bit about that and how the executive team and the board works together?
Yeah. So, as part of me taking on the responsibility of CEO and president, I joined the board in 2022. But I've been close with the board when I joined in 2015. And, I talked to a lot of companies, quite a few, many more than have adopted a Bitcoin treasury policy, who've added Bitcoin to their balance sheet. I've probably talked to 3, 4, 5 dozen companies that have seriously thought about putting Bitcoin on their balance sheet since we started this journey in 2020. And by and large, the biggest barrier to moving forward with putting Bitcoin on their balance sheet is not the CEO, it's not the CFO. The biggest barrier, and maybe rightfully so for corporate governance purposes, is the board. And to put Bitcoin on a public company's balance sheet, it means you have to change the investment policy. And the investment policy is governed by the board of directors. So you need the board to vote for a change in the investment policy. And if you don't have a supportive board, and many don't, right? Like if you look at an average public company, it probably has 8 to 10 members on their board, purposefully diverse in terms of background. And usually there's someone on the board who's extremely conservative, who doesn't want to take the time, the 1,000 hours, whatever it is, to learn Bitcoin. And immediately, their immediate reaction is one that I think has changed a lot in the last 4 years, but one that you still hear, the typical tropes. And so you have to get over that. We have had the good fortune that we have a board at that point in time in 2020, because we're a control company, it was a smaller board of folks who understand finance extremely well, understand software extremely well, and understand the public markets really well. All of them were willing to go down the Bitcoin rabbit hole, were willing to spend 1,000 hours, understood the pros and cons of going down this path. And their history with the company, many of them have been here a long time, is to support the innovation and the trailblazing we've done. Since then, we've actually added 3 more members to the board at the beginning of this year, all of which are very supportive of the strategy and are extremely well known in their fields. So having the right board is extremely important. And ultimately, everybody's goal here is to create shareholder value. And I think we've proven we've been able to do that.
Absolutely. We're sitting in the strategy headquarters in Tyson in the DC area, but you have offices and operations internationally as well. Can you walk us through those locations and operations as well as the current headcount?
Yeah, we have field operations in, I think at this point in time, it's about 27 cities. And think of all the major cities around the world, right? New York City, and here in our headquarters, Toronto in Canada, London, Paris, Madrid, Warsaw is a major center for us. In Asia, we have offices in Seoul, in Tokyo, in Sydney, in Singapore, in Hangzhou, China, which is a major development center for us, in Pune, India, in Dubai, in South Africa, and Sao Paulo, and Buenos Aires, and Mexico City. So we have offices all across the world serving those 4,000 customers or so. Our main development centers, if you will, are in Hangzhou, China, where we have a large team of engineers. In Warsaw, Poland, we have basically it's sort of our HQ2. And more recently, Buenos Aires, Argentina, and Pune, India, we have some development staff too. But it's a very international company. About 60% of our revenue is in North America, 40% international, which makes it a lot of fun.
Strategy's known today as a Bitcoin Treasury company. But if we wind the clock back, Strategy as a business intelligence company has quite the history of spearheading innovation. You offered analytics in the web, browser-based analytics in 1998. You were the first to do that. You were the first to offer analytics on mobile devices in 2008. You were one of the first in the cloud in 2012, the first to offer integrated AI capabilities in 2023. So Strategy, by all accounts, appears to be constantly pushing the edge of technology and innovation. Can you tell us about the present day operation on the operation side as opposed to the Bitcoin side, the BI and analytics front?
Yeah, as much as I love talking about Bitcoin, I equally love talking about BI. If you take the last 4 years and what we've done in the Bitcoin space, I would argue in the last 35 years, we've done something similar in the analytics space. And for those who aren't super familiar, right? We offer what we call enterprise analytics. Some call it business intelligence to corporations. What does that mean? Large companies around the world are using our platform to take data, typically sitting in something like a data warehouse. Think, right? It used to be like a Teradata or Netezza. Now it's Snowflake or Databricks or whatever. And we're surfacing that information. We're letting business users interpret that information and provide it to their end users, right? So if you were to, retail is a big sector for us, right? If you were to walk into, let's say a Starbucks today, right? Baristas and the managers behind the desk are looking at strategy reports on a daily basis to see how they're performing, right? That's just an example, right, of what we do. And there are many examples, large banking, financial institutions, et cetera. I state all that as a backdrop. We invented this space. And by we, I wasn't here. In fact, I was a user of Microstrategy at that point in time. But Michael Saylor, our founder and executive chairman, literally invented the BI space as you know it today. And so imagine all of these podcasts and interviews that you're seeing Michael Saylor doing about Bitcoin. He was doing that about analytics in the 1990s, right? And the company saw significant growth and significant increases in valuation and significant appreciation in our stock price by being one of the internet darlings, if you will, the dot-com darlings in the late 1990s, because we invented that space. You open your mobile phone today, and inevitably, some of your apps have charts, graphs, analytics on there. We created that. We were the first to really provide B2B analytics. In fact, we were the first ever enterprise application for the iPad, right? We worked with Apple and released Microstrategy on the iPad. And if you think about today, you walk into a retail store and you pay for something on Square, and they turn the iPad screen around, and there's a Square app, and you begrudgingly put a tip in there for your coffee, and then you sign it and all these kinds of things. Like
what amount of tip? For the water.
Well, you can make us. We were the first enterprise application on the iPad, and I think that was 2009 or 2010. Now we're in the cloud. And I'll say I started my career as a software engineer. Essentially, I had an engineering undergrad. I've always been a tinkerer, a technologist, and I joined Microstrategy in 2015 because I thought it was the best analytics technology out there. I'd used it for 20 years prior to that, and I thought it was awesome. And so, if people are like, so what is a software company doing in Bitcoin? I would argue it's actually quite consistent, right? We invented our way into analytics. We invented solutions for large companies to provide data to their end users within their corporation and to end customers outside. We invented that because there was a need. Well, in 2020, when we had an issue with interest rates and our short-term T-bills that we invested in, with rates going from 225 basis points to zero, and we saw inflation coming in, and whether it be 15-20% a debasement of the US dollar, we invented our way into a solution to that. And of course, the solution already existed. It was Bitcoin, but we invented the concept of a publicly traded company putting Bitcoin on their balance sheet and making it their primary treasury reserve asset. So if you look at the last 35 years of the company, we have a history of every 5 to 10 years inventing something that, in my opinion, changes the market, changes the world. And it's a pretty cool thing working at a company, being a leader in a company that just invents things. We find a problem, we innovate it, we invent it, right? And of course, that's the hallmark in the background of what everyone knows Michael Saylor for. But the 1,500 employees we have in the company, they're here because we invent things. And we have engineers, software engineers who every single day are coming in and working their butts off to invent new things because they want to work for a company that creates new product, creates new things. And now with Bitcoin as the latest innovation, what's really interesting is you asked about our folks. We have 1,500 folks who probably, not every single one of them, but the vast majority of them, walk in with an extra hop in their step every single day because, sure, maybe they're creating software, inventing software, selling software, servicing software, et cetera. But they're also part of a company that they know that is innovating in now not just the enterprise software and analytics market and AI market, but we're innovating and we're inventing things in the financial markets. So it's a ton of fun. I mean, people are just having a great time here. And then we've done our rebrand, so that makes it even more exciting. We're an innovation company, in the most pure definition of the word, right? Sometimes you hear software companies, sometimes you hear folks in the Bitcoin space say we're innovators. And I always, we went through our corporate values recently, and we were going to put innovative. And then we looked at all of the, tech companies within our space that are our peers, and like 80% of them had innovation as a corporate value. And I said, well, we're not going to use innovation then because we're not going to do the same thing everyone else. We chose the word bold. But I would argue 80% of the technology companies that have innovation as their corporate value, they're not really true innovators. They're just following along. They're just sort of going through the steps of what they think is innovation. We innovate. We invent. And it starts with our founder. That's core to what he believes. Continues with me. That's core to what I believe. Innovate in the space of technology and now finance too.
It reminds me of entrepreneurs and intrapreneurs, with an entrepreneur being an entrepreneur that's kind of being, not to use the word innovative again, but inside of a company. Do you think that's a fair characterization of some of the engineers and some of the folks here that are, I mean, if you're innovating, then I guess you'd have intrapreneurs
Yeah.
kind of on staff
Yeah,
as part of the projects.
I wake up every morning trying to figure out how I can disrupt some decision that I made 5 years ago, or that Mike made 6 years ago, or that somebody in the company made 2 weeks ago. And it's not for everybody, right? Like you ask some of the folks here that you either love it or you hate it. The culture of strategy is either you love it or you hate it. There's not a lot in between, because you have to know that whatever you decided 4 weeks ago or 4 months ago or 4 years ago is ripe to be disrupted. That's the nature of innovation and being an entrepreneur. And it's risk-taking, but it's questioning every single day the principle with which you made a decision yesterday. And so yes, to work in this company, to fit in our culture, you have to be an intrapreneur, to use your words, right? Like every single day, like, we're doing something in the performance review process right now, which I'm particularly excited about, that scares off our HR and legal team a little bit. And if you do something that is pushing people, in certain corporate departments, you're sort of onto something good. The less innovative thing we did is we decided to use AI, our internal, AI LLM. In this case, we use ChatGPT at this point in time. And I said, one of our challenges is that we don't really provide people as good feedback as we would like to on their performance. And this happens all the time in most organizations, right? Especially more junior managers who are learning to manage, who would rather be a friend of their employee than their manager. Right? I like to use the word coach, because the analogy that I always give is, if you're coaching a team, your expectation with the player, the athlete, is you're going to push them to do something that they never thought possible that day, right? And then the next day, you're going to push them to do something that they never thought possible, right? If you're running a 100-meter dash in 12 seconds, you're going to push them to do it in 11, and then 10, and 9.8. And they're going to throw up at the end of practice, and they're going to look to you and they're going to say, thank you. Thank you for pushing me so hard. That should be the relationship between a manager and employee. It's not about going and getting beers after work. It's not about being your best friend, asking you about your family, although you want to have the empathy and understanding. You want to push that person to do the most they have ever been able to do in their craft, and they will thank you for making them a better individual and a better employee. But that's inherently not the typical relationship, even in a software company, between a manager and employee. And so how do we improve upon that? We use AI to look at the written performance review and give people feedback and improve their performance review. Not that revolutionary. Step number 2 that we're going to do now is, okay, you wrote down what you thought about the person, how they can do better, what things that they've done they can continue to do. Well, then the next step is, how do you make sure that conversation occurs? Right, the conversation you and I are having, this is being recorded. Everyone's going to get to watch it. We know this conversation occurred. How do I make sure the conversation between the manager and the employee took place and was done well? And so what are we going to do? Back to a sports analogy, we're going to film it, and we're going to provide feedback. Like after an athlete runs the 100-yard dash, right? What do? You record it. Right. And then you watch it back with the athlete and say, these are the things I noticed that you did that you could do better. These are the things you can't do better. So we're going to record the performance conversation. We're going to have AI review the performance conversation and say, manager, these are the things you could have done better. And so I did it as a guinea pig. Right. And as you can probably, not unexpectedly, but a blind spot for me, the AI came back and said, Phong, you did a great job providing the feedback, positive, negative summary, but you didn't give the person a chance to say anything about what they're going to do, right? You didn't ask the employee, okay, so based off of that, what are you committing to do? Excellent feedback that the AI gave me. And so we're going to do that with all of our performance conversations. And I give that an example. If you're an intrapreneur, right, you should be comfortable with those things. You should be comfortable with the fact that you're going to record the conversation between the employee and the manager, and the AI is going to be able to provide excellent feedback on that. So that's just an example of how we continue to innovate internally, not just with our technology and not just with Bitcoin, but in how we're working with employees and how we're going to improve the output of each and every one of the 1,500 people working here.
That's great. Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. Strategy's kind of termed this phrase, volatility is vitality. And Strategy's journey as a Bitcoin development company and then iterated to a Bitcoin Treasury company, as you've said, has been well documented.
Yeah.
In fact, this August will be half a decade of the Bitcoin Treasury Strategy. What did you learn from the last crypto winter, and how does that price drawdown inform your strategy for the next crypto winter? Like, what's your thought process and approach for next year, for 2026, when a Bitcoin drawdown occurs?
Yeah. You see all these sort of terms and memes, and like diamond hands was one of them. You don't know diamond hands until you just go through a Bitcoin winter.
Yeah.
But I'll start with probably the most important thing I learned. And I learned a lot of things from Mike throughout the last decade. And I'm extremely thankful for that opportunity, is having conviction, right? Like, and Mike is many things, as a founder, as a chairman, as a former CEO, as a mentor, and as an excellent spokesperson for Bitcoin. I would say one of the biggest things is his conviction, right? And how do you get conviction? You get conviction by doing first principles, understanding and analysis of the things that are critical and sort of within your sphere of what you're working on, right? And so Bitcoin is one of those things, right? I still remember the first conversation I had with Mike on Bitcoin. I think it was March of 2020, right next door to this office, maybe it was April. And he said, I have an idea for you, right? He said, you're going to think I'm crazy, but I really, really want you to think about it. And rather than immediately react, I want you to go off and do some homework. And as you can imagine, in March of 2020, the amount of content to do homework on Bitcoin is not what it is now. But I went and read the white paper. I watched a bunch of YouTube videos, and I listened to a bunch of podcasts, there weren't that many. And I tried to read as much research, good research on the topics that I could. In fact, we tried to go and find, bulge bracket bank research, of which there was like one dude who was willing to talk to us on the record about the topic. But, I went down the rabbit hole along with Mike at the same time. He would send me stuff to look at. I'd look at it. I'd send him stuff to look at. And over a course of a couple of weeks, I don't know that I got through 1,000 hours worth of content, but I got through a lot of content. And by doing the first principles analysis of how Bitcoin works, you start to develop conviction, right? And by understanding exactly how Bitcoin works from a technology perspective, why it's important from a financial perspective, understanding the cryptography associated with Bitcoin, understanding sort of all the details, right? Setting up a node here, all those kinds of things. You have to do the work yourself. And then when you do the work and you spend whatever it is, 1,000 hours, and you get conviction and you know it's the right decision, then the next step is to go all in. Right. And you've heard Mike talk about this, and I'm a big believer in it too, right? Like when you have conviction and you know something is the right decision, you don't sort of hedge and go halvesies, right? You don't sort of say it's 5% of my portfolio or 10% of my portfolio. You say it should be 80, 90, right? Maybe even 100% of your portfolio. And so if you do your first principles analysis, you go through, do the research, right? If you understand the underlying technology, right? And then you develop conviction that you made the right decision. And then you go all in the decision. Then when a crypto winter comes around, there's no sort of, hey, there's a drawdown on Bitcoin. It goes from 67,000 down to 16,000. Strategy value, which at that point in time, our stock in 2020 had a low of 90. We got into Bitcoin at around 125. Our stock surged up to 1,300 and then came right back down during crypto winter, down to sort of about 150, 140, right? That is not the time to go back and say, oh, I did all this analysis. I went through first principles research. I became convicted. I was wrong. Right? It's hard to say. It's easy to say you're wrong if you're not sure. It's hard to say you're wrong if you're sure. I'm pretty darn sure about Bitcoin. So when you go through a crypto winter, but you're sure that you made the right decision, you can feel steadfast that you made the right decision. Happens all the time in organizations, right? The role of the CEO, the role of the chairman are quite important because every single day, some employee, right? Which you want those employees to ask you the question, are you sure? You want them to challenge you, just like I challenge folks and we innovate and we challenge the bankers and the lawyers and everybody we work with all throughout the Bitcoin ecosystem. We challenge our partners. You want people to challenge you, right? So you don't want to create an environment where people aren't challenging, but you also want to have such great conviction that when you're challenged, you say, yeah, I understand what you're saying. Thank you for the input. But now let me explain to you why we're going to keep doing what we're going to keep doing. And so if you can build that conviction, right, then you can go through a 2022 and you can come out the other end having had an understanding of the decisions you're making and feeling good about them. And that's true with Bitcoin. That's true with software. I'd say it's true with life in general. And look, Mike's been through and I've been through failures, wrong decisions. And I think what makes the company strategy special compared to a lot of others who are trying to do something similar in the Bitcoin space, failures, mistakes, et cetera, are things that you can learn from. And when you've done something tremendously wrong, you have even more conviction the next time you do something that you've learned from those mistakes that what you're doing is tremendously right. And I think Mike brings that to the table. I think he and I would agree. He's made more big mistakes than I've made, right? So which is more important in that he's learned more from those mistakes than I have, right? And so, look, and obviously having a track record of success now almost half a decade in, I hadn't thought about that. Half a decade's a long time, 5 years. We've seen Bitcoin go up, we've seen it go down, we've seen it come up again, right? And I think, for those who are just now discovering Bitcoin or just now discovering strategy, as we sit here in the beginning of 2025, I follow X, I follow a lot of folks, and they're like, I got in at the top in November of 2024. Oh my goodness, this is no, this is not the worst thing. Have some conviction. Like if you got in for the right reasons into strategy in November of 2024, or Bitcoin for that matter, go back to those reasons and make sure that if those reasons haven't changed, stay the course, have conviction. That's what I've learned.
If you could choose the narrative right now for Bitcoin, what would it be? I mean, you hear many things in the market. You hear that Bitcoin is return additive. You hear that in some cases it's a hedge against shorts. Matt Cole, CEO of Strive, recently told me that Bitcoin in your treasury is the best way to guarantee you won't go out of business. And I think he said that to some CEOs. So what themes do you see in your conversations around Bitcoin for corporations these days? And is there one narrative or a simple explanation that you think is most fitting to this moment?
Yeah, so I'll start with Bitcoin as a technological solution to a financial problem that has existed in the universe, or at least on Earth. I don't know about the universe, I guess. On Earth for the last 3,000 years, right? And it took 3,000 years for all the elements of technology, right? Distributed computing is probably the most recent one, to allow this invention to occur, right? So first and foremost, it's a technological solution to a financial problem, right? Like, a more elegant way to state it is it's digital gold, it's digital capital. It's the digitization of a financial problem, right? And I start with, does the invention solve a problem? Yes. Does it do it in a better way than it has in the past? Yes. So if you start with that, it's an amazing technological solution. And I'm a technology guy at heart. I've tinkered with technology my entire life. I have probably way too much home automation at home, as my wife would attest to. Like, I've got like 4 different apps running my entire house, and 90% of the time they work and 10% they don't. And it doesn't bother me because I'm trying something new. So I believe in technological inventions and innovations to problems. That's what our software does. That's what Bitcoin does. So if you believe that as the base case, and you believe that this is a major issue, right, the financial problem we're trying to solve right around the world, right, then you say, okay, you got a great, elegant solution, and you've got a problem. So start with that, right, and you got a market for it. And then you get into, okay, so is this something for consumers? Is it Bitcoin for retail, right? That's proven its case over the last now, I guess 17 years or so, that there is a retail need and issue that we're solving for, right? And then what happened in 2020 that was interesting is it became a Bitcoin for corporations, right? Bitcoin now is solving a problem that corporations had. In our particular case, the problem was that we weren't leveraging our balance sheet the way to its full extent, right? And so Bitcoin for corporations, you'd argue that wave, right? We call it the Bitcoin standard era, started on August 10th of 2020, right? And the next piece was really Bitcoin for institutions, right? And I would say the rise of the ETFs and BlackRock with the IBIT and Fidelity and other companies really at the beginning of 2024 created now the wave of Bitcoin for institutions. And some of our financial instruments are convertible debts now, our strike and preferred offerings. Those are providing Bitcoin-backed solutions to institutional investors, right, that they weren't able to access easily in the past. And so if you go from Bitcoin for retail to Bitcoin for corporations to Bitcoin for institutions, the next big thing is Bitcoin for nation states, right? And we were just at the Bitcoin for America conference yesterday in Washington, D.C., and it was an amazing meeting of an intersection of lawmakers, policymakers, congressmen, senators, people within the executive branch of the White House, and important folks across the Bitcoin ecosystem, that now Bitcoin for nation states is no longer a question. It is not even an inevitability. Last Thursday evening, it became a reality, right? And so if you think about, now we've got everything covered. We've got Bitcoin for retail investors, Bitcoin for corporations, Bitcoin for institutions, Bitcoin for nation states. The entire adoption curve is now there sitting in front of us. And it's an amazing thing. Now, if you're a corporation like we are, the question is, why should you adopt Bitcoin, right? And the biggest sort of aha that I went to business school. I went to MIT, and I remember sitting in a corporate finance class, and there's entire classes on what do you do with your income statement to make it better, right? Like, there's entire strategy classes that all they're looking at is how do you grow revenue, how do you cut costs, how do you increase your gross profits, your operating profits, like lots of conversation about this. Like, an entire B school strategy class is focused on the income statement. And then you have a balance sheet conversation that's primarily a class in M&A. Everybody loves the M&A class. It was taught by a famous MIT professor. And the entire conversation wasn't about what do you do with your balance sheet. It just jumped to the conclusion that the best thing to do with your balance sheet is M&A. Therefore, we're going to have an M&A class. There's no corporate treasury class. There's no, obviously at that point in time in business school, there was no Bitcoin class. It was the foregone conclusion on the balance sheet class was called M&A. And so what do you sit and talk about? You don't sit and talk about, well, what's the hurdle rate, and you do a bunch of DCF analysis, yes, but you look and you have a strategic conversation on M&A. And why do I think M&A is the most important class? that talks about the balance sheet? Probably because that's the highest percentage that a bank takes on a financial transaction, right? Like we do a lot of things with our friends, the banks, and they're great folks. But, if you do a convertible bond, you might get, 2-3%, right, to the bank. If you do what we're doing now, preferred offerings, maybe you get 100, 200 basis points. Maybe you do an ATM, you issue equity, you get 100 basis points. You buy back shares, maybe you get 50 basis points. You do an M&A deal, the bank takes 500 basis points, if not more. So why do you think there's a class talking about M&A at MIT Business School, right? It skips over everything else on the balance sheet. It's because that's what everybody wants to do. You leave business school thinking, heck, I'm going to go buy companies. It is the most glorious, beautiful thing in the financial world for a corporation to do. What else happens when you buy a company, by the way? If you're the CEO of a $10 billion market cap company and you buy another $10 billion market cap company, well, you know how CEOs are paid? Based on the market cap of the company. So if I'm a $10 billion market cap company and I buy another one that's $20 billion, not $10 billion, now I'm a $20 billion market cap company, guess what happens to the CEO and the board and all the other executives? They double their compensation, right? So now the banks are making money. They taught all the people in business school that you want to do M&A, and all the executives and the board members are making twice their money. How do the shareholders do? How do the customers do? How does the product do? How do the employees do? Generally, not great, right? How do they fare? Not great. What should you really do with your balance sheet? What should you really do with your balance sheet is decide what your hurdle rate is, your IRR. It might be 8%, it might be 10%. Think about the fact that you can invest in the S&P 500 and get 15%, right? Maybe before Bitcoin, what if you just said, I'm going to take my balance sheet, I'm going to invest it in the S&P 500 and get 15%? Why didn't anyone do that? Right? In fact, what they said is you should return it back to your shareholders because they know what's best. Not really. Your shareholders gave you the money to determine what's best, right? If they wanted the money back, maybe they would just leave and buy another equity, right? But instead they say return it to their shareholders because they know what's best. And I remember listening to this. A lot of our shareholders are like, you should buy back your stock. Well, if inevitably buying back your stock states that you're okay with your IRR of 8, 10, 11, 12%. I would argue the best thing to do if you have enough excess cash and capital is to go put it in the S&P 500, which is 15%. Put it in the Mag 7, which is 20, 25%, right? Now that you have Bitcoin that's appreciating at 40, 50, 60% a year, right? Why wouldn't you put it into Bitcoin? If your alternative is you don't need the capital to invest back into your company, if your alternative is you don't know what to do with it, why wouldn't you put it into Bitcoin? Keep the capital within the company. Don't decapitalize yourself. I always find this interesting that decap is a bad thing. Like, would I want to decap myself? No.
It sounds bad.
It sounds awful. But that's what you're doing when you're buying back shares. You're decapitalizing the company, right? You're basically saying, I'm going to take $1 billion and rather than keep it for a rainy day, buy something, right? Invest it back in the company, buy Bitcoin at 60% rate of return. You're going to decapitalize yourself and go give it back to your shareholders. I guarantee you, if I was a shareholder of a company and they said, hey, Phong, I'm going to give you back the shares via dividend, right? Or I'm going to give you back the shares, via buyback. And let's call that like an 11% rate of return by doing that. Or do you want me to invest it in something that's going to give you a 40, 50, 60% rate of return? Fair. There's some risk associated with it, but I'm long-term focused. As a shareholder, if there was a shareholder meeting and somebody told me, here are your options, Phong, we're gonna take this extra $1 billion and we're gonna give it out as a dividend, or we're going to buy back stock, or we're gonna invest it in something that's gonna give you a 60% rate of return. I, as a shareholder, I'm pretty darn sure I'm gonna bet for the 60% thing, right? And yet the problem is, all the way back from what they teach people in business school, all the way to the incentives of the executive team, all the way back to the mischaracterized statements such as, if you don't know what better to do with your capital, you should just give it back to your shareholders, right? We've got this entire ecosystem that basically has all the wrong premises if the conversation is even happening. because it's a balance sheet conversation. It's an unsexy conversation, right? The other thing I hear all the time, I meet corporate treasurers all around and I talk to them about Bitcoin. And by the time I'm done orange pilling them, they're like, yes, I'm going to buy Bitcoin for myself. And I'm like, are you going to put Bitcoin on your balance sheet? They're like, no, I'm not going to put Bitcoin on my balance sheet. I'm like, why? And they're like, my job is to do no harm. And I'm like, wow, that's sort of a sort of crappy job. Your job isn't to create value for your shareholders. Your job is to do no harm, right? That's how you chose this path to become a corporate treasurer. Our corporate treasurer's job is not to do no harm. It's to maximize shareholder value and maximize the balance sheet. And I think, going back to understanding Bitcoin and the problem it solves and the technology associated with it, understanding what's happened over the last 17 years with Bitcoin now becoming adopted by the most powerful nation state in the world, right? Why wouldn't you as a corporation also consider Bitcoin for your balance sheet? And, the easy compromise would be for companies to say, let's go with 5-10%. Again, if you found something that gave you a 60% return, are you going to allocate 5-10% of your capital to it? Or are you going to allocate all of your capital to it? That's going to be the next question. Right. And then the next question is, and Vivek Ramaswamy stated this pretty well yesterday, actually. Then do you reset the bar as the hurdle rate, the internal rate of return, what you expect to be higher than to make an investment? Will it be 11%? Will it be 15% for the S&P 500? Or will it be Bitcoin at 40, 50, 60%? And if you do the latter, every investment you're about to make as a company has to exceed 60%. People ask me all the time, hey, are you going to buy another software company? You buy an AI company. Right? We get these offers all the time. And for a lot of the reasons, operational integration is extremely challenging in a software company. But more so, I ask the question back, what do you think that AI company is going to give me? If you think it can give me a greater than 60% rate of return, I'd say, yeah, let's talk about it. And of course, at that point in time, they all just quiet down and don't say anything.
Do they understand that what you're saying is that Bitcoin is your hurdle rate?
Or depends on who I'm talking to. Mostly not, right? Otherwise, I think you would see more people with Bitcoin on their balance sheet in corporations. I go back to, though, I do think the intellectual thought process and the intellectual thought exercise is getting easier on Bitcoin. And I think the United States government as a nation state declaring that they're going to create a strategic reserve for Bitcoin is really the shifting of the Overton window, right? Like, it's really now okay for every corporation to have a conversation around what role should Bitcoin have, right? And not sort of say it, in jest, right? But to have a serious conversation, right? And I think when they think deeply about it, they're going to realize that if you're, if you now have a hurdle rate of 60%, let's say 35%, just to make everybody happy out there that, doesn't think I'm being hyperbolic or a Bitcoin bull or all those things, which I am. Let's say 35%. If everyone realizes that 35% is their hurdle rate, man, doesn't that change everything? It changes every conversation inside your organization and with your shareholders and others. And I think in the next year, maybe sooner, those conversations are going to occur it should occur in every single corporate boardroom. And then it becomes a question of, can you go and change the minds of your board members to change the investment policy to add Bitcoin in the balance sheet? And I go back to the question, what is the goal here? What is the role of corporations? It's to maximize shareholder value. Right? It's that simple. It's not to take the income statement and do the best you can, but leave the balance sheet alone. It's not to enrich your executives, right? It's not to make sure that your board members who've been with the board for 10 years and are about to have retired, right? Have 18 grandkids and don't really want to trouble themselves with the latest and greatest innovation, have an easy life as a sitting board member of a major corporation. And they can fly in once a quarter and say, hey, I'm the board member of Corporation ABC, on the S&P 500. No, it's to maximize shareholder value. It has to be a conversation.
When these treasurers have a conversation with you and they say, thank you for orange pilling me. I'm going to buy Bitcoin personally, but I'm not going to put it on my balance sheet because my job is to do no harm. Well, they're doing harm because it's melting ice cube. They're doing harm because of inflation. Is that a conversation? Do you push back? Like, how do they not realize that they're literally kind of contradicting themselves and saying something that's in reality kind of ridiculous?
What would I say? 70% of the corporate treasurers and CFOs I talk to want to put Bitcoin on their balance sheet. And they lost when they give you that look. They're like, you're right, Phong. I'm going to invest. And they look you in the eye and they sigh and say, but I can't do it. They've given up, right? And I feel like the bureaucracy of corporations is not too different in many cases of bureaucracies of the US government, which we talk a lot about today. And you have a lot of people who have just given up. And what I love about Bitcoin is if you spend enough time on it, it gives you hope again, right? We have hope.com, Bitcoin is hope. Bitcoin gives you hope. And so when you sigh and you're like, man, I'm 48, I have 3 kids. I just want to go see their soccer game on the weekend. I don't really want to push this envelope. It's too hard. I'm going to make my $300,000 a year as a corporate treasurer, and I'm just going to be happy with life. I've given up on trying to innovate in the corporation that I'm a part of, but my life is pretty good. If you then get handed the solution, you get handed hope, then you're like, oh, maybe I can do this. Maybe the world is changing. Maybe I should focus on shareholder value. Maybe I should walk into my CFO's office and say, hey, have you heard about this Bitcoin thing? And the CFO is going to say, yeah. And they're like, let's do it. And you walk into your CEO's office and you have a conversation with the board. It gives people hope again. That's what Bitcoin is.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. You want to talk about KPIs?
Let's talk about KPIs.
Strategy.com. I mean, it looks phenomenal. It almost looks like a hedge fund or something where you just go to strategy.com, you see all these KPIs. When you wake up in the morning, like, what's your process? Is there like a way that you think that they work together, or like 1 or 2 or 3 of the KPIs relating to Bitcoin yield, Bitcoin gain, Bitcoin dollar gain that it's kind of like the top of the dashboard for you in your thought process?
So let me start with sort of the genesis of strategy.com and the KPIs, right? Genesis number 1 is we want to be the most transparent public company in the world. We realize that what we're doing in the Bitcoin space needs to be held to a higher regard than any other public company, because we understand the responsibility that comes with being the first and largest Bitcoin treasury company. And we want for our shareholders and for all of those who are like or don't like Bitcoin, to the regulators, to our accountants, to our audit firm, to the lawyers that work with us, to the banks that work with us, to our debt holders, that we have a significant responsibility to do everything above board and as transparently as possible. So as we realized that we wanted to create a bunch of KPIs that were relevant to Bitcoin, the by and far the best way to do this is publish it publicly to everybody possible. And with that in mind was number 1 reason why we created strategy.com. And that is what we'll always strive to do, is to be as transparent as possible with our business. The second piece is, back to financial statements in business school, we realize that for a Bitcoin Treasury company, the traditional, I'll call it KPIs, gap accounting, and financial metrics that people look at aren't applicable fully to Bitcoin Treasury company. Right? Early on, as an example, our shareholders looked at Bitcoin per share, right? And in the traditional finance world, there's earnings per share, EPS, right? And in the Bitcoin world, there's Bitcoin per share, right? I guess BPS you would call it. And so the concept of being able to understand the accretion of Bitcoin to a company on a per share basis, right? And we look at it fully diluted, right? We're very conservative about how we count our shares. We provide the share count that we look at on strategy.com too. That was sort of step one. And we started looking at Bitcoin per share internally as early as late 2020, early 2021. And then we realized that's important, but then there's the velocity with which you increase Bitcoin per share, which is Bitcoin yield, right? And we started looking at that really in 2024, early 2024. And that Bitcoin yield is probably the number one indicator with which we decide how to invest in Bitcoin, when to buy Bitcoin, when to lever up, when not to, right? Bitcoin yield is the most important KPI. And beyond that, we added Bitcoin gain and Bitcoin gain in dollars. And the reason we added those is Bitcoin yield is relative to the size of the company, right? And so we saw other companies adopting the Bitcoin standard who have these massive Bitcoin yields on small size companies. And we said, well, let's report this on a absolute Bitcoin basis, right? So we had about 75% Bitcoin yield last year, which equated to about $14 billion in Bitcoin dollar gain, right? And over 200,000 Bitcoin gain. And so we said, let's look at the amount of Bitcoin and the Bitcoin dollars, and those you can look at on a comparative basis across companies, different size companies, and determine as a shareholder how much additional Bitcoin you're gaining and what is the dollar value of that. And so those are some other KPIs we've added. We're going to continue to push the envelope. And I think over time, what's going to happen is for Bitcoin Treasury companies to become a new category of company, a set of KPIs that will be adopted by these companies. And I would love to see a year, 2, 3 years out, these actually become gap metrics that every Bitcoin company, which the number should exponentially increase from year to year, there will be a set of gap accounting metrics and they won't be KPIs, just KPIs anymore. I'll end this with, this was such a fun project, right? Like the advantage of being a software company with 1,500 employees is I don't have to go hire a bunch of web developers and a bunch of people who are going to integrate with sources. We have a bunch of people do this, and designers and all this, web designers. So, we took a group of, ultimately it was 5, 6, 7 people, and literally Mike sat with the group once a week. I would sit the group almost every day. And we'd iterate on this for about 2 months. And you can imagine the initial product's completely different than the end product. But that's fun for me, right? Sitting down and developing and building the website. And we're going to have a mobile app version of this coming out hopefully very soon. And we're going to do more and more cool things with it, because now that the website's been created, every single day I'm thinking about how do we make it better and better and better, right? We know that like the copy function of the charts is okay, but not great. And so we're going to improve on that too. But one, we want to be fully transparent. 2, we believe there are going to become new financial standards and metrics for Bitcoin companies. And that's why I've done it. And it's been so much fun. Everything's fun.
Do you think there should be or will be like 100 strategy replicas, or should most companies kind of acquire a Bitcoin treasury while still in pursuit of their corporate mission, their original stated corporate mission?
Well, I think there is going to be, and there already are some replicas of strategy in markets where you can't easily access strategy or Bitcoin, right? Metaplanet in Japan's a great example. You have HK Holdings spinning up in Hong Kong. You'll see true Bitcoin treasury companies, right, where the vast majority of their market valuation is in their Bitcoin asset value, spinning up around the world. So that's sort of category number 1, right? Like true Bitcoin treasury companies. I think category number 2 are companies that have a pretty significant operating business, right? Like think of the Magnificent Seven, the NASDAQ 100, the S&P 500, turning around and realizing that there needs to be some allocation of their balance sheet to the extent they have excess cash, right? Positive cash flows, excess cash on their balance sheet. There's a place to invest a portion of that into Bitcoin. Now, I could make an argument that they should be investing all of their excess cash into Bitcoin, right? But let's put that argument aside. Some of their excess cash in their balance sheet should be in Bitcoin versus returning it to their shareholders, versus putting it into short-term T-bills, versus putting it into corporate bonds, or versus investing some of it back in their company. So I think there's a strong argument for positive cash flow generating, growing companies to put Bitcoin on their balance sheet, right? And let's for argument's sake say that should be a 30% allocation, right? And so that's the second category. Will they turn around and put 100% allocation on their balance sheet? I don't think so. So that will be great for those corporations because they will now take something that's sitting on their balance sheet that was essentially either a melting ice cube or only giving them an 11% return. And now they're getting a 30, 40, 50, 60% return on it, right? And so that'll be great. That doesn't compete with strategy, right? In fact, it helps the ecosystem because more people are going to buy Bitcoin, more people are going to innovate it. Then you have the third kind of company, which has operations in innovating on Bitcoin technology. It's something that we played around with. We haven't sort of landed on the exact thing that we want to do, but we'll continue to have a couple of Scrum teams do it. But, it could be that you're providing custody services, you're providing exchange services, you're providing hard wallet, wallet service, whatever it is, right? And I think there will be a group of companies like that and that you're already seeing, and they tend to have venture capital investments and funds for early stage companies. And so I think there are those kinds. But I think there will be a subset of true Bitcoin treasury companies all around the world and including in the US. And what I'd say to those folks is hurry up, right? Like Bitcoin's only going to go up in price and become more scarce. But on the other hand, there's never a wrong time to enter that.
STRK, this was on the strategy handle last night. STRK serves a market 2.6x larger than MSTR. First of all, can you expand upon that? And then also there's this point of view that said STRK was not as successful as initially thought, but obviously in light of the $21 billion ATM offering announcement, is that true? You want to unpack any of the strike conversation?
So I wrote that, right? So I there are reasons, and I think the oil refining analogy that Mike walked through, I think in October in our earnings call, was a pretty good one. There are different pools of capital and different investment reasons, right? There are fixed income investors out there who, think of somebody who's, call it 70 years old. They've retired. They have $2 million in their bank. And all they really want of that $2 million for the next 20 to 30 years of their life is to return 10% fixed yield and get $200K and live off of that $200K. I would argue that individual is not interested in MSTR. They're certainly not interested in MSTU. They're not interested in Bitcoin. They just want to make $200,000 a year off of that $2 million. And to date, the way they would do that is likely some concoction that somebody provides to you via their wealth management fund that takes, 100 basis points off of that, right? And they're going to give you that 10% dividend and nothing else, right? And you're paying a pretty fat fee for that, right? Maybe, you could invest in corporate treasuries, right? But that those are getting you more like 5 or 6%, right? And you're leaving some money on the table, right? That is the global bond market as it exists today. And I'm talking about it for retail. Obviously, that global bond market is very interesting to fixed income investors, insurance companies being a good example, where they want to have a fairly low risk, high return, high yield option. And that global bond market is about $300 trillion, right? Versus the global equity market, which is about $120 trillion. So the whole idea behind strategy launching Strike is to access that global market, the fixed income market, folks who want a fixed return versus a short term, I'm going to buy strategy, I'm going to buy Bitcoin, I'm going to see ups and downs, right? Now, I would argue if you really want to maximize, right, and you have a long 40, 50-year horizon, you put it in Bitcoin, you just sit and you watch it accrete, right? But there are people who just need income off of their investment, right? And so the size of that market, folks who invest in bonds versus folks who invest in equities, is 2.6x times. So why did we launch Strike? We're going after that market, right? And we'll launch other things. We're going to continue to look and survey the market and see what else we can do. But there are different folks who want some sort of a fixed income outcome, right? I would like it too, right? Like you might want to, you may say, I'm going to put 90% of my net worth into Bitcoin and I want to just sit back and watch it. But you actually have to pay the bill somehow. You have to buy your orange tie. You have to get your crew. You have to do all these things, right? And so having some income is a good thing. That's what Strike does. It gives you an 8% perpetual fixed income. It's a preferred offering. And it also gives you some equity upside, right? Downside protection. So we expect it to be less volatile. So then what is the success of Strike? I think it's interesting that folks are saying it's not successful. First of all, Strike was back to the innovation, a perpetual, meaning it goes on forever, preferred convertible bond. There's been one issue in the last 20 years, right? So, and you can imagine when we're sitting and based on Bitcoin, right? 0, right? We're the first company that's ever done this. And you can imagine we're working with the smartest bankers in the world, working with the smartest attorneys in the world. And of course, when you go to them and say, hey, this is what they want to do, they say, you can't do this, right?
Of course.
And you can imagine what happens when they say they can't do this to Mike and I. That's I'm just getting started, right? That was the challenge, right? Challenge accepted. We're going to do this. And generally speaking, when people get uncomfortable and you are able to do something that others haven't done before, that's innovation. Right. That's 0 to 1 innovation, I think, has been coined by Peter Thiel, right? That's when we're creating something, not on top of something that someone else has created, but something no one else has ever done before. And so Strike was super innovative, right? And it is the top performing preferred bond in the world in the last decade, if you measure it by increase in value, or you measure it by volume/liquidity, right? So I think it's been very successful. We've just put out a $21 billion ATM on it. We're just starting to test the ATM out, right? Because what else has never been done before? An ATM on a perpetual preferred convertible bond, right? Fairly unprecedented. And so we're doing that now. And when you do it, you just have to, we're in the market sort of every single day testing and seeing what we're able to do in terms of liquidity and issuing more of this. And that's fun, right? And when you get the end of the day, we're we issued this much via the ATM, you get the report from the bankers, you talk to the treasury team, et cetera. And that's just that's pure invention, innovation, and it's so much fun. How will we measure success? How much of this, what is the market demand for this? How much of it are we able to issue, right? What happens to the price? So understanding as the price goes up and we issue more, it might drive the price down a little bit, right? What's the volatility, right? How is it correlated or not, right? We also have shown on our strategy.com website, and we share this information, via X also, that generally speaking, it's uncorrelated to MSTR. It's uncorrelated to BTC. So if you're sitting here and saying to yourself, I want an 8% yield on an instrument that may appreciate in value, that gives you a convertible option to strategy and is uncorrelated to strategy, to Microstrategy, MSTR, and Bitcoin, we've created it. We invented it. We've created the instrument for you, right? And so I think as people wake up and realize what this instrument provides, an 8% yield is a fat yield, right? That is great. And as it prices down below par, the yield stays fixed, right? At 8%. So the dividend stays fixed at 8%, right? The yield actually increases, right? Increases to 10% and even higher. So you're actually getting a really fat payout every single quarter, primarily in cash. I wanted to invest in this, right? Like for reasons that we weren't able to, the Section 15 officers weren't able to invest in it, but it's a great investment. Like I would buy more of this, right? Like, and so it's a great thing to have in your portfolio. And literally you're getting a check every quarter, like a dividend paying instrument, like if you would buy a dividend paying stock, but this is a preferred, right? So the downside is much less.
Yeah, I've actually heard one individual describe it to me as if they have cash or they have savings, they're just parking it in Strike.
Yeah.
That's like their savings account.
Yeah,
That's an interesting way to think about it.
Why would you invest in a money market that pays now 4.5% or a CD that you're tying something up for a year or 6 months and you're getting 6-7% when you can get an 8% guaranteed yield on a perfectly liquid instrument?
With the markets being the markets and needing to be accretive with this entire strategy, there's a point of view that the ATM of shares in the fall was like too fast. Do you think that pace was too fast? Do you think it was correct? And then would that at all inform that pace of the common shares? Would that inform anything that we might see with the Strike preferred shares?
I think we go back to the KPIs, right? Mm-hmm. If you look at BTC yield, as long as you're adding Bitcoin that's accretive to our shareholders in terms of BTC yield, right? There's a lot of conversations around dilution, and it depends on what your definition of dilution to shareholders is. Obviously, your definition of dilution is any incremental shares issued, then that would be seen as dilutive. If your definition of dilution is, are you decreasing BTC yield or increasing BTC yield? We saw that we added 200,000 Bitcoin. We increased BTC yield by 60-70%, and we added last year $14 billion of BTC gain to the company. Do you believe in those KPIs? Like, we're not making these KPIs up out of the ether. We're looking at the business. We're talking to our shareholders. We're talking to our debt holders. We talk about these KPIs and they all sort of nod and say, yeah, this is how we look at your business. And so if you believe in these KPIs, BTC yield, BTC gain, and as you know, we're as transparent about them as I think we can possibly be, right? In fact, when you think about issuing equity, I fully understand the perspective that if you issue equity via an ATM and the return on that equity, right, is going to be 11% on an investment to increase your income, right, that happens in 1 to 2 years, there should be skepticism. Where there should really be skepticism is if you're issuing equity to do an M&A transaction that has a theoretical 7% return and it takes 3 years to see it. We're literally issuing equity. We're turning around and in some cases buying Bitcoin that exact same day, that exact same hour. And we are showing you what the BTC yield is the following Monday. But know that we're internally asking ourselves, how do we create that BTC yield minutes after we issue the equity? Right? Literally, we're going out and trying to buy Bitcoin. We're trying to be, we don't want to be long the dollar. We want to be long Bitcoin. And so it's a completely different thought process of issuing equity and waiting for 3 years to see if you get a return versus issuing equity internally, us knowing within an hour and our shareholders knowing no more than 7 days later, right? Or really 5 days, 6 days later, right? So it's hard to apply traditional financial analysis of dilution when you're dealing with Bitcoin.
Could it make sense to buy your own shares back? Could it ever make sense, like, for example, if the MNAV falls below 1, would buying the shares back be the better buy?
There could be an argument that if the BTC yield is positive, buying shares back, right? And in that particular case with negative MNAV. But then the question is, how do you buy those shares back? Would we sell Bitcoin to do it? No. Would we issue debt to do it? Maybe. Right. And then you go back into the conversation of, well, if I'm able to issue debt right? If I issue the debt, then the question is, once you've issued that debt, what is more accretive, buying back shares or buying Bitcoin? And you'd have to do the math and the calculation off of that, right? In 2022, during Bitcoin winter, we issued debt, we issued equity, and we bought more Bitcoin with it, right? And then there were conversations that we looked at internally then of, are we better off buying back shares? That was on the table, right? And so there could be a place where we would do that, but we wouldn't sell Bitcoin to do it. We would issue equity or share or debt to do that.
How many people here currently work on the Bitcoin strategy versus everything else? I've heard it's 5 people, it's 12 people, it's 8 people. How many people is it?
Total, someone in our finance and accounting department actually looks at this every single quarter. The number is somewhere in the 10 people range,
okay.
Right? And that's the core, I'll call it Bitcoin finance strategy. We have the rebranding and we have the website and we have other things like that, which obviously add to the value of the organization and the Bitcoin organization. And then you might say there's another 10 or 15 people that do that. But from time to time, we tap on people to help with other things. One thing that we did last year in August of 2024 is we ran the two things fairly separately. We said, you're a software person or you're a Bitcoin person, right? And of course, there's myself and some other folks, in our finance department, Andrew King, there's some intersections there where we're a little bit of both. But we said, it's time. We need to, and it was one of, we said it's time to spread Bitcoin with love. I think it was Mike's 21st of his 21 rules of Bitcoin is to spread Bitcoin with love. And we said it's time. And so we actually now have created training for everybody in the company. You have to do it. In Q3 of last year, it was Bitcoin 101 or Bitcoin 100. In Q2 of last year is Bitcoin 101. We made people watch podcasts. You can imagine, watch videos, listen to podcasts. We made everyone read the Bitcoin standard. And I say everyone enjoyed it. It was a lot of fun, right? Like now we're doing Bitcoin 104, or Bitcoin 103, which is focused on Bitcoin finance for corporations.
Okay.
But you had to get through 100, 101, 102 before you could really do 103. And everyone is doing it. We did we're going to have a Bitcoin debate, right? Like that's going to be live on the 7th floor. And we're doing all this fun stuff in the company to really start to spread Bitcoin with love across the organization. But core day to day, it's about 10 people who work on the strategy.
Strategy announced a Bitcoin advocacy role. Like, how do you measure success for Bitcoin advocacy? What all are you endeavoring to do?
So this is something that is also new, right? I'm a big believer in focus, and our focus was buying Bitcoin and coming up with and inventing creative capital markets transactions and strategies to buy Bitcoin. And for 4 years, we did not. We were very careful not to move away from that, right? And since then, especially as we saw what happened at Bitcoin Nashville last year, right? Really becoming now more than just Bitcoiners and Bitcoin Treasury companies, but expanding to investors and also expanding nation states. And actually, us seeing things like MSTR True North, like yourself, like folks who are really now looking at strategy, not just as a way to invest in Bitcoin, but as someone has a role, even beyond Mike, as an advocacy role in Bitcoin in general. We said it's time that strategy becomes more of an advocate of Bitcoin. That was one of the reasons behind our rebrand, right? Like, we're still obviously very focused on our software customers, but shortening the name to strategy, putting the B up in there as part of our logo. These are all ways that we can become more and more part of the Bitcoin community. And advocacy is a big part of that, right? Like, an advocacy is really making sure that we're attending the right events, creating a Bitcoin hub here. I'm very excited about that. I'm not sure I'm quite ready to define what success is, right? Like, we're going to let this thing run for a little bit. Like, is success that we have 50 people on our 6th floor every single day? or success that we run bit devs and meetups here once a month and 100 people come, right? Like we're going to see how this goes, right? Bitcoin for Corporations, which is happening early May in Orlando. I'm expecting a huge turnout, and it's going to be a great event, and it's going to be another place that we can really advocate for Bitcoin across all of the areas that I talked about, for retail, for corporations, for institutions, for nation states. So excited about the advocacy role, TBD on what we declare success as.
Some people believe that Strategy will become the largest and the most profitable company in the world. Do you share that view?
I certainly share that ambition, right? And the excitement to pursue that. Do I think it'll happen? Okay, I'm actually notoriously bad at picking, what stock's going to do well and these kinds of things. I'm very good at knowing what I have conviction in and knowing how to innovate and knowing how to execute. Right? I'm not great at predicting the future. Mike is excellent at predicting the future. He seems to always get it right. And when he gets it wrong, we joke it's just because he's picked the wrong timeline, right? But he gets his prediction is typically right. Look, I think if Bitcoin goes to 13 million, as our model states, right, by 2045, that would, depending on what you think is going to happen to our MNAV also, could project to a company that is worth $3, $4, $5 trillion. Right now, not everyone else is going to be standing alone, right? Like, the $3 trillion company now might be $10 trillion in 20 years, right? And can we be a $10 trillion company? Look, I think we're just getting started, right? I think MSTR is well defined. I think Strike is another way to access capital markets, as I mentioned. That's 2.6 times the access to the typical equity markets. I think future instruments that allow us to access the markets will be interesting. I think all of these types of things, and look, the cool thing about innovation, I mentioned we invent something new every 5 to 10 years, and maybe with AI, the advent of generative AI, maybe we invent something new every 2 to 3 years. And so can we invent something that you and I haven't even thought about, maybe Mike's thought about, but hasn't stated anything about in 2 years, that's going to get us to be a $4 trillion company to a $10 trillion company by 2045? I think so. And that's what we're going to work towards. And I think it's tremendously fun to work on things like that.
Phong Le, President and CEO of Strategy, thank you.
Thank you, Tim. Thanks for everything you're doing for the space. I appreciate you taking the time.